Africa to the Middle East. So I think one of the key themes of this conference this year is investment in hospitality. And I think that theme captures well the sentiment of the market for things that we've been seeing at ADL. We've been doing a lot of projects when it comes to investment attraction, both with government organizations, hospitality businesses, and investors. And this is a compilation of some of those insights. We're going to be publishing a viewpoint on this soon, hopefully by early next year. And these are just some initial views that we want to share with you on investment attraction under the title of Unlocking Capital Flows. Pressing the wrong green button here. I want to start first with recognizing the advantages that you can get of foreign investment into hospitality assets. From a country and economic level, it helps grow the economy. So within the GDP equation, you have investment coming into the country, deployment of capital, you have tourists coming to the hospitality asset. That's domestic accounts increasing through domestic spend of domestic tourists, and you have increased in the export account from the international tourist spend. So from a country level, you have the growth of the economy. But as a hospitality business or a hospitality owner, you can also bring in that investment to have a foreign partner to help finance the project, realize it, share the risk. But I think what it also brings a benefit of is validation of the project. By having investment come in, it signals a set of confidence from the market on the bankability of the project. Foreign investors, too, they can't just bring capital, they need to bring expertise when they deploy that capital. So those foreign investors can bring increased standards into the delivery of hospitality services. They can bring a network of partners with them to help better deploy their services. And they can also bring in global brands to help attract the type of tourist visitors that they want to bring in. So given the benefits of attracting foreign investment into hospitality assets, how well is it in the world that you get foreign investment into hospitality? So let me tell you a story about that deployment of foreign capital into hospitality assets through the different regions in the world. And this is the post-pandemic recovery story of that deployment of capital. You can see, of course, the pandemic shocked capital flows, inflows of foreign direct investment into hospitality, with slight recovery in 2022, and 2023 was actually a difficult year for foreign direct investment in general. So you can see a leveling out of some of those investments globally. If you focus on the Middle East, though, the Middle East sustained quite well and even grew during the period. And that was driven, of course, through the recovery of the travel market. And you can see here layered onto the graph the number of tourist arrivals in the Middle East during that same time to help sustain customers, visitors to hospitality assets that would be attracting investment. Now, where was that capital deployed? Here is a graph that shows the landscape of where foreign direct investment projects are happening in the Middle East. Dubai has been quite competitive in attracting investment, foreign direct investment into tourism and hospitality, followed by Saudi, which has been growing more and more of a share. Qatar and Egypt have also taken good share of hospitality FDI projects. This data comes from FDI Global Markets. They have a really great data set, and we've been working closely with them to integrate some of the data into this presentation. Now, that was geographically on the previous slide, but then what types of tourism projects has this capital been funding? Well, it's been funding projects across the value chain, including foreign direct investment going into travel companies. So you have Musafir, Trip.com, which is a Chinese company, making investments into Dubai and their offices. You see transportation projects, rental car companies, foreign direct investment going into establishing rental car companies. Here you have the example of this Turkish rental car company in Dubai. Bigger capital is more deployed in infrastructure. Not all of that gets counted towards the tourism equation, but I think it's important for the foundations of building hospitality projects. You then have accommodation, which is the heart, of course, of tourism FDI spending. And there's a number of different projects here that you can draw examples on when you go to Dubai Monitor or Invest Qatar, which documents FDI projects going into those countries. Food and beverage is a lighter ticket option when it comes to FDI, but still important. You see Zuma in every Gulf capital. That's a result of FDI spend often. And then the last segment is attractions, retail, and events, which is a big part of the tourism value chain. I think one notable transaction there was a US investor, the Harbour Group, investing in Al Khulud, which is a Saudi football club. So that, we're very excited to see how that investment takes place in that investor's journey in Saudi with that football team. So here's some examples of some of the tourism projects that go into attracting FDI. In that backdrop of seeing the opportunity and the advantages of FDI, in the backdrop of tightening government budgets and ambitious tourism projects, the Gulf countries have been setting FDI tourism targets, which we're sharing here on the slide. They've also set ambitious tourism targets. What we share here also is the percentage of FDI going into tourism projects. And you can see, consistent with the previous slide that shows all the tourism projects you have in the UAE, the UAE has been very successful globally in attracting foreign investment into hospitality projects. 8% of the UAE's FDI goes into tourism and hospitality projects. Saudi's share has been growing, and Qatar also has a good established percentage. But this isn't a result of inaction. In fact, you've seen a lot of programs and reforms making it easier for investors to enter in these ecosystems to make investments. So in Saudi, there's been changes to real estate ownership laws, expanding the amount of properties you can have foreign owners. There's a law on white land and vacant property, which would tax real estate that's not being utilized for projects, incentivizing development of some of this land. In the UAE is more developed when it comes to reforms on attracting investment, but NextGen FDI's initiative is focused on streamlining registrations for technology companies in Dubai. And then Qatar has also made announcements for simplifying licensing procedures. So there's a lot of opportunity, but still there's challenges that persist in the market. So let me share with you some of the challenges. One is, and this is a sounding board from different investors that we have worked with. One is the lack of bankable data when it comes to supply and demand for hospitality assets. That's an important key consideration for investors who are trying to make decisions about to deploy their capital into countries. You see a lack of institutional investment, pension funds, REITs, when it comes to these types of real estate vehicles with exposure to hospitality assets. And that is due to a number of things. One, there's a lot of public investment already in the ecosystem. And two, land is less available and tends to be very expensive. So it reduces the opportunity for the development of hospitality. We see challenges that have been raised by investors when it comes to coordination with countries. Sometimes there's many different stakeholders you have to coordinate with, and they would prefer to coordinate with one central person. The Gulf countries are very interesting, too, for the foreign investor because you have a lot of greenfield projects. And with greenfield projects, the return on investment tends to be longer than brownfield, and there's a lack of brownfield projects in the pipeline for FDI attraction. There's eroding profit margins from the current global economic situation, and then lastly, some unclarity about regulations. So these summarize, I guess, some of the sentiments we've seen through the work with our clients and some of the investors we've been talking to about the challenges of investing into hospitality in other markets, international markets. So this gets me to my concluding slide, which are some thoughts for how do you better unlock capital in the Gulf and in the GCC countries. One is you need to have consistent government support for tourism promotion, for deploying capital, for having stable project timelines for large projects, for transportation infrastructure. That stable government support is critical. The second one we have is streamlining processes. That corresponds with the challenge we saw earlier. 3 is on the data, being able to create a data set that's validated and trusted in the marketplace on the supply pipeline and on the demand pipeline. The fourth, it comes to increasing, is deal structure, and coming up with a deal structure that's good for both parties, and also deal structures that encourage institutional investment into hospitality assets. And the last is building capabilities for investment attraction. It's not all the time you're going to have investors from all over the world knocking on your door. You have to build teams within your organization that can go out and develop pitch decks and meet with investors, do the opportunity screening, to do the negotiations, to bringing an investment. And that's one of the key things that we've been seeing with some of our clients is building out these investment attraction teams. So with those thoughts, I invite you to come afterwards if you have any questions on the data or things that we presented. We're going to reflect on some of the things in this presentation and in our next discussion, panel discussion that's led by my colleague Camilla. So thank you very much.